Welcome to the Investopedia Advisor Conversation Series. I'm Caleb Silver, the editor-in-chief of Investopedia. I'm so fired up to be back doing these advisor conversations. It's been a minute, and it's a great way for us to jump back in. I, of course, am delighted to be the editor-in-chief of Investopedia. I get to host these conversations. I get to talk to our friends and financial advisors out there and help lead these conversations. But I'm really excited for today's chat because we get to celebrate the Investopedia 100, which is our list of the 100 most influential advisors in the United States. We measure influence by those advisors who are using their platforms and their practices to uplift, to educate, and inspire the financial services and planning industry to help their clients, to help their communities, and really spread the good word about financial literacy, financial education, because that's where it all starts with us. We know that's the most important thing. And the folks that we have here are pros at that. We're delighted to have two of the top 10 from our 100 list from 2022 that just released a couple of weeks ago. Lizetta Braxton, our good friend and the co-founder and co-founder and co-CEO of 2050 Wealth Partners and one of the great leaders in the industry. So good to see you, Lizetta. Welcome.
Thank you, Caleb. Glad to be here.
And we got Peter Lazaroff, the Chief Investment Officer at PlanCorp and one of the host of the Long-Term Investor Podcast. I believe I was on that podcast, and the author of Making Money Simple. Great to have you, Peter. Welcome.
Caleb, thank you so much for having me as a part of the conversation.
Good to be with you, my friend. And we're delighted to welcome Laura Gregg, the Director of Practice Management and Advisor Research at FlexShares. FlexShares has been our partner on the Investopedia 100 this year. So much fun to partner with them. We have so many cool things in store coming out of the 100 here. We all love to celebrate financial advisors. We do it at Investopedia. FlexShare loves advisors too. Hey, financial advisors, you guys are heroes in our book. So good to have you folks here. We're going to talk about some cool things. We're going to kick things off. I want to get into a little bit of what you do, a little bit about your practice. So basic intros from both of you beyond what I just said, just so people know who we're talking about. You can set the stage for your practice, how long you've been in it, and kind of who you see, who you service. And then we're going to get into the cool survey and study that FlexShares just put out. Laura's going to take us through that. That will use as the basis for our conversation. But folks, you can put your Q&A in the chat. We will get to the Q&A as it comes up or towards the end of the conversation. If we don't get to it, I promise you that we will answer your question, me, Laura, Peter, or Lizetta. So Peter, you start us off. Tell us who you are, what your practice is, who you see mostly, who your clients are, and then we'll get to Lizetta.
Sure thing. Well, I am the Chief Investment Officer at PlanCorp, which has been in business since 1983, and we have about 1,500 clients and $6 billion in assets under management. And our average client size is kind of in that $4 to $5 million range, but our family office is serving those who are in the $100 million net worth. And we also have clients starting at about $500,000. Some people who are not actually giving us assets, but there's just no liquid wealth. And so a lot of my day-to-day is focused on investment policy and communication to clients. I am not a lead advisor on any clients any longer. That is a past life. However, I'm sort of like the grandparents to our clients, where I get to go in and play with our clients for an hour, and then I leave and I don't have any responsibilities afterwards. So there's none of the day-to-day work there, but we're working with a lot of executives, physicians, business owners. That's sort of the group that we're typically serving.
Cool. Lizetta, tell us about what you're doing over 2050. Some great things since you guys launched.
Oh, absolutely. So I'm co-owner and co-founder of 2050 Wealth Partners. My business partner is Rianka Dorsonville. We merged our practice back in early 2020. 2050, we're leaning into the name because by the year 2050, the U.S. will be a racial mosaic, and we want wealth to transfer along with that. We are a boutique firm of four female a team of advisors. Rianka and I still serve as lead advisor, as well as our two associate financial planners. Shout out to Raquel as well too, and Madison. Our clients that we serve are thriving professionals, entrepreneurs, first-gen wealth builders, and sandwich generation wealth protectors. And what we found is that a lot of our clients have worked with us as a financial planner for the first time, and we are delighted to be able to provide access for underserved and overlooked populations, and really appreciate how our clients have become family to us, and we are family to them.
Yeah, that's so obvious, and the engagement you have with them is such a beautiful thing to watch. You, Rianka, the whole practice, been really cool to watch that grow over time. So, Laura, tell us what you do. You have the title almost speaks for itself with FlexShares. But in practical terms, for advisors that are listening or other folks who are tuning in, give us a sense of what you and your team are up to.
Yeah, so first I'll start off FlexShares ETFs as part of Northern Trust. And my role is I sit within our sales team, but I'm wholly focused on better understanding the advisors that we serve, the asset managers that we serve, and high net worth investors that our advisor clients serve. So we do a lot of proprietary research, and we build that out and share our insights with our advisor clients to help them better grow their practice and understand what their peers are doing.
Yeah. And we're going to get to some of that research, especially this big thing you guys just did on trust. So I'm going to see if I can share my screen without breaking anything here. One panelist can share at a time. Let's see if they'll let me be the sharer. Can you see that shared screen? Are we all there looking at the same thing? Full screen? Oh, no.
Almost.
All right. Jess, I'm going to have you share it if you can. On our end, because it looks like I may just break the internet if I try to do that. So if we can pop that up, let's see if that works. If not, we're just going to go without it, but we'll make sure we share this with everybody. Oh, there we go. Yes. Cool. All right, let's get to that screen that has the personas on it. And then we'll get back to these in a minute. There we go. Cool. All right, Laura, talk to us about this new survey, this new research study that you did at FlexShares. And then I want to have Peter and Lizetta chime in on it, and we'll have a conversation about this. But basically, it broke it down to 5 personas that advisors see, but it was really about trust and really about how to use trust to gain more business with your clients. So tell us the high levels of the survey, and then we'll get into these personas.
Yeah, what we were hearing from a lot of our clients is, how can we build more wallet share with the existing clients that we have? As we all know, it's a lot more work to go out and find new clients than it is to build assets with your existing client base. So we hired a group of social scientists that were trained at the University of Chicago. We did 2 surveys. One was in-depth in-person conversations with high net worth investors across the country, across the net worth spectrum. With those conversations, we really wanted to dig in and understand what their money stories were, what led them to give or to not give more money to their advisors to manage, and what they thought of the industry overall. And then most importantly, how they felt when their advisors asked them to give them more money to manage. We followed that survey up with an online survey of more than 200 high net worth investors that were currently working with advisors to just corroborate what we found in the qualitative study. And fortunately, those 2 did. And what we found is not surprising, wallet share follows trust. And you can see how we broke it down was in all the conversations and all the online surveys, it really revealed itself into 5 key personas. There at the bottom is the protector. They are the most risk averse persona. At the other end of the spectrum is the simplifier. They are the least risk averse persona. And so what we did with this data was try to understand what drives trust, what drives wallet share, kind of the what to do and what not to do based on each individual and very unique persona.
Yeah, I'm just trying to figure out where I stand on this chart. I'm probably a verifier, willing to go with them, but I want to just verify myself, just given what I do. So this is totally fascinating to me, and I think the way that the curve, the way that the chart moves up and to the right in terms of assets you're willing to give your advisor based on who you are, I find fascinating. So Lizetta, let's start with you. How do you establish your clients' trust and their persona, I should say, right out of the gate through the intake process when you're first meeting them or a little bit further down the line? How does that work in your practice?
I have to say that we have all simplifiers. They may not have started that way in their mindset, but the way that our model is established is that we believe in having high trust and a high share of your wallet. We are comprehensive financial planners, so we don't only look at investments, we look at all aspects of a client's life, which to some degree is undressing financially. And so that does require a high degree of trust. And also, since we're taking a deep look at their cash flows in the beginning as well, too, a higher share of the wallet. Not only are we looking at cash flows, we're looking at that net worth statement as well, too. So We may have some that feel a little hesitant about the process, but we explain that very transparency in terms of our fees, how we're structured on the front end. When they sign up to meet with us in the intro call, we verify, we said, okay, have you looked at all our information? Have you followed us online? To make sure that they've done the due diligence. So when we're having our conversation and we say, do you want to, come on board? Then the answer is yes. And they partner with us for life, which is pretty significant, realizing that a lot of our clients have never worked with a financial planner before. So we take pride in the care and culture that we add.
And they know right out of the gate, this is the type of firm you are, this is the way you work. And then you have, like a lot of advisors, pretty sophisticated software that kind of breaks down that network statement, but also goal planning and everything. So you're seeing everything at once the relationship is established, right?
Exactly.
And Peter, I know from you and from talking to you and also looking at your calls to action around your site, you're both so good at this in terms of getting people to understand what you do and then to at least learn about your practice. How does intake work with you? How are you establishing those personas out of the gate? Or do you only have one or two personas in your practice?
It's a really interesting question. And you led with what the first thing I was going to say is that on our online booking sheet, there's a checkbox that says, are you willing and ready to delegate all of your financial decisions to somebody else? And so I think a really common thread, the verifier, from the way I read it, is not necessarily someone who doesn't delegate. It's just they're going to give you a little bit and build trust over time and ask you questions. And so the simplifier is who we would like to work with. The simplifier is by far the vast majority of our practice, but we do have some verifiers, and I actually enjoy it a little bit. I like earning the trust, and you do things over time and it makes it fun and engaging. And honestly, if I were to walk in the door with $50 million and I give someone 5 and they know there's another 45, I can count on that service level. They're going to want that extra money. And I think the verifiers behave that way. I think I pick up on that. One other comment I'll make, Caleb, is earlier in my career. So when I first moved from analyst role to that of a lead advisor, I was 25 and I was working at a firm with $1 million minimum. And so I played the role of trying to be with the competitor or the collector. That is who I had to target at that age because no one was giving me their whole net worth. And so it was an easier sell. I got some people who were the simplifiers, but it is interesting as you progress through your career. I think if you want to be, I think Lizetta makes a good point. If you're very investment centric, you're probably targeting those competitors and collectors more often, whereas our firms are more comprehensive. And so we want the simplifier who's going to delegate. And how you express who your ideal client is online, and the more that you explain, hey, this is the value provide, this is how we do our best work, the more likely you end up with one of these personas in your practice. But I would say we, though, do have a little bit of everything in there. The only persona that didn't really strike me, although I recognized it as a trait among any of the many clients we have, is the protector. We don't see as much of that, but even in the research, there's some percentages that all of you who are watching, I'm sure it's like a download or a follow-up. It's a pretty easy PDF. And the percentages that you see assigned to these different personas do sort of feel correct based on my 15, 16 years of experience.
Yeah, and I would imagine, as you guys said, as time goes on, maybe some people start as a verifier or start as a protector, end up as a simplifier over time as they earn their trust. But also, to Lizetta's point too, if it's about the portfolio construction and it's about asset allocation, I think people are by nature going to feel a little bit more reticent, a little bit more hesitant because of those behavioral traits we all have in our animal spirits, the fear of loss, the hopes for gains. My friend said to buy this stock, are we in this stock? Versus that holistic financial planning, which is, no, let's take care of everything. And that's just a little piece of it. But I wonder, Lizette, in your practice, have you seen people go from one stage to the other as their life stages change, as their needs change, or are they all in from the top as a simplifier ready to go?
Absolutely not that they're all in as a simplifier. That's our model, is partnership. Do we have to help them move along the spectrum? Absolutely. And by communicating that it is a journey, it gives room for the different personas to come to play. And we work with that closely with each client, customized based on where they are and in helping them get to where we want them to be. One of the acronyms, I like acronyms that I use for trust, is trading resources using sustainable truths. right? And so that is anchored in the idea of partnership and the idea of sharing resources. They are giving us their money and their time. And so we have to give them time and value. And so what we want to emphasize over and over again, that they can count on us, depend on us, and we would like to do the same for them in being forthcoming and being vulnerable so that we can best serve their best interests. And the only way we know that is if they tell us and work along with us.
Right. And I mean, you and Rianka, of course, at the top of that firm, you have some new planners with you, but you're the people, you and Rianka are the folks that people know or who you meet through your marketing materials most of the time. How important, how critical is it for you to have those initial meetings and for them to get to talk to the people that founded the firm, who they know it through?
Yes, we are still the face of the business. And so we are very much engaged in terms of the client intro call. And we have our team members supporting us as well, too, because we want our prospective clients to know who will be serving their account. And it is our team. We have lead teams, we have identified our sub teams, and we have huddles as a team every week. So we are very much abreast of what's going on. We cross-train as well, too. So even though Rianka and I are the face of the firm, we let our clients know, our prospects know we are fluid, that we at any time can step in each other's shoes seamlessly, which is pretty exciting. And that's how we're going to continue to grow our firm.
Yeah, that's so cool. And I know that's so important. That's the way I would want it to be, in a firm. If that's what I was looking for, you just want to know, everyone knows kind of what's going on in my life, and they can touch on different things, the legal aspect, the planning, the insurance, the investment aspect. So Peter, from your perspective, you're doing a lot of the investment, the placement and things. That's something that we know people have as I said, animal spirits about, because it is, gains and losses, and there's so much noise around the investing part of financial planning, even though it's not the most important, or not necessarily the most important part of that. But as you sort of tactically and practically put client money to work and build your models for them, how much are you thinking about that, about the behavioral aspect of what's going on with your clients?
I think one of the things that I have taken pride in the portfolio construction side of what we do is how much time and effort we spend thinking about how a client will react to a given construction or exposure based on when they look at their portfolio, whether it's logging in through the custodian, logging in through our app, looking at their statement. And even to the point where, I've had some somewhat heated debates with some academics who are far smarter than I am and have far greater, intimacy with the data. And ultimately, one of the things they don't understand is what it's like to talk to somebody across the table that doesn't understand the data as well. It's one thing to build the perfect portfolio with the data, but that doesn't really matter if no one can stick with it. And so I think that as we think through additions, subtractions, tweaks, we don't make many portfolio changes. Like I said, I've been at PlanCorp for a little over 8 years, and we've made 3 changes. So that's not that much. And that's with a new chief investment officer. So someone getting the whole portfolio, and I haven't turned the whole thing over. 3 changes, iterative, but a lot of them are based on if I'm sitting next to every client every time they open up their statement, we're good. But that's not a scalable model. And just like Lizetta has to sometimes pass off something to somebody else, yes, I am always here. Everybody is speaking the same language. We're all coming from the same place. And I think that trust that you build with clients, that there's a process for thinking through such things. They really want to know, they don't really care if I know what is going to happen with interest rates or inflation, but they want to know that I have paid attention, that I haven't just pulled something out of thin air and then put my head in the sand. Now, we all being in investments know that to some extent we could do exactly that and probably be okay. But they want to build that trust. They want to know that we didn't miss something. Just like when I go to the doctor, if my ankle hurts, I would hope that they only do an X-ray, but they don't do an MRI. It's like, well, wait a second. If you don't think it's broken, but you're not doing an MRI, did you miss it? How did you come up with this solution? So they want to, sort of like showing your work in math in elementary school. They don't just want to see the answer. And if they do just see the answer, they need to understand why it is that without seeing the work. Sure. So you either have to show the work, or you have to make the answer so simple that seeing the work, I don't need to see how you arrived at 2 + 2 = 4. It just is. how you arrived at the answer of the square root of 78. Like, yeah, I'd like to check your math on that one. So,
So
I have no
given a
idea
lot
what
of
the
the,
square root of 78 is, by the way. I need a calculator for that.
I don't know if there is one or not a whole one. So
No.
given all the uncertainty we've seen in the last 6-7 months since the beginning of the year, really, but really for the last few years, but really this intensity, and it seems to have boiled over in the last 6-7 months. Start with you, Peter. Are you having to at least take more phone calls, make more adjustments? You're not necessarily on the other end of the client call, but are your advisors and you're saying
Yeah.
people are freaking out about this, that, and the other. They had everything in AMC and they're wondering what to do. Not that they would ever do that, but are you taking, is the uncertainty reaching your, the level where you're having to answer more questions than usual?
Yeah, things drip up to me. I don't know if doesn't really make sense, but they drip down to me, if we'll call it that. I would say that I am on the phone with clients less frequently than I was in the March 2020, April 2020, less than great financial crisis, less than when S&P got downgraded and the pigs over in Europe were having debt issues. Part of me thinks that that's just because we lived through a downturn with clients. The demographic for me that I see that I am ending up on the most calls and I see the greatest concerns tends to be people over the age of 70 and particularly over the age of 75. I mean, and really when you reach that area, the level of uncertainty is higher. And so that's where the phone calls are coming from. But everybody else, when you become a new client, we try to set expectations that losses are normal. And because it has been 2 years, but really a year and a half since we peaked and, had a last, a year and a half when this bear market started from when the last one had ended, most people had been through something with us. And so it has felt calmer and what I tend to characterize as orderly. Past downturns to me have felt chaotic. There's a lot of textbook stuff going on in markets that people are like, yeah, that makes sense. Like interest rates are going up, like the economy's going to, so they're all like, this makes sense. This is what I learned in the textbook. Our clients don't think like that, but there just generally is less panic. I think it's more, hey, bear markets are really annoying. Like we knew we were going to have to live through this. We don't like to live through it. We don't want to live through it. And just because we say stay the course doesn't mean that we don't acknowledge that things are bad or couldn't get worse. It's just, we know that that's the right course of action.
Yeah, I hear you on the orderly front. When my 84-year-old Aunt Jane says to me, isn't this just a reversion to the mean? Not only do I spit my wine out, but I'm like, well, that's excellent. Well done. You've been reading Investopedia. Lizetta, how about you? I know you have the plan. You have your clients so invested in the plan, so nobody gets out of their lane per se, but we are, we get a little freaked out sometimes. So are you taking more questions, more calls from clients, more concerns, or are you just having to remind them? Let's remember what we started here.
Yeah, so I think it'd be helpful to give some framework about how we approach asset construction. So when it comes to investments, we see marketable securities, we take an index approach because we like to find alpha in other places, real estate, and definitely human capital when it comes to businesses. So for a lot of our clients, they're thinking on the front end, how can they leverage their human capital and then also transition into that passive income. So while they're thinking about the markets, they're balancing what's happening in the market and the other aspects of their portfolio. What's happening with my job? What's happening, with my other multiple streams of income? And how can I put that to work? The other side of our asset construction is what we call our operations of savings. So we were making sure in the front end, and I mentioned this about the cash flow and the net worth statement and balance sheet. We want to make sure that you got your lifestyle account, that you have your cushion account, no sleep. People call it emergency. We like to call it cushion because you may need to pivot. So we have clients right now with this crazy market and also with burnout and the like who are going on sabbatical during this time when most people are conservative because they have their cushion account, they have their annual goals, they still have the money set aside for the trips if they want to take and stand in those long lines at the airport, right, as well, because their foundation is set, they're clear about the ebbs and flows, and then they're shifting to where the risk really is. And for them, that's what we're doing. We're managing the risk with the views on their whole asset portfolio.
Yeah, that's what I love about you guys. Holistic financial planning. That actually means something to you. This is not about, are we outperforming the S&P? Did we buy the right stock at the right time? Way beyond that. All right, let's get back to the FlexShare study because it's fascinating. You have a quiz, Laura, in your research hub for advisors, asking them how much they know their clients, how well they know their clients, and sort of what the trust levels are. I want to let's take a quick look at it, and folks, you should check this out on the FlexShare site. You ask them a bunch of questions, but you also you have this quiz, how well they understand their client behavior. What were sort of the results of that quiz, and did any of them surprise you?
Yeah, so yeah, some good surprises, some not so good surprises, and this quiz was developed really to at a high level engage people with the research and hopefully have them take a deeper look. But one of the questions we asked is how much of your client's assets do you manage? And what we found there is that about 40% of the people that responded to this survey said that they were managing between 40 and 60%. And that really is in line with what we found in our survey with some of the large firms that we're working with. Again, for the most part, primary advisors tend to have between 40 and 60% of their clients' assets. Some things that were not surprising, but important was that in a lot of the persona questions, it was clear that the advisors didn't really understand by the cues that we gave which persona this hypothetical client would fall into. And why that's concerning is because if you don't truly understand your client's money story, their expectations, and the emotions that are driving their behavior, then you're not in the place where you can give them the service and the client experience that they really need. We talked a lot about, earlier about the verifier and the simplifier. Both great clients to have. The verifier is much more investment savvy, and they really are looking for that long-term relationship. They're just following that trust but verify mentality. And as soon as you can show them that you will deliver, that you can deliver a consistent, great client experience, they'll port over almost all of their assets to you to manage. Simplifier, that hurdle is a little bit less, but the simplifier also doesn't have a lot of investment expertise. So both of those personas are people that you want to target. If you've got them in your client base, pay very close attention. They're easy to get, especially the simplifier, because they view all of their assets in a lump sum. They're also easy to lose if they think that you are not thinking of them, that they're not top of mind for you. So I encourage you, if this is something you're interested in, to dig a little bit deeper. But those were some things we got through the quiz.
Right. So Lizetta, sound like anybody that you've dealt with in your practice, or have you had to, identify this type of behavior and then just trying to bring them around to the fact that you work a certain way, and if it's not a mutual trust relationship, it's just not going to work?
Yes, and it's painful to lose clients. So once again, I said our structure and our process is a simplifier. We identify where people are along the spectrum, hoping they've done their due diligence and are self-aware. And we also realize that they don't know what they don't know as well too. So we have come to the moment, and it's been healthy and good to say, this is how we're structured. We are deep engagers, need a high degree of trust on both ends. And they've turned back to want to do it themselves and figure that they've been educated or come to terms with, no, this is not what I really want. So we try to avoid with questionnaires, with conversations, with our processes, button, everything up. And it's not 100% proof at all either.
Right. And Peter, even though you're on the CEO side of things, is trust something you can actually measure with clients? And this is for both Peter and Lizetta and Laura too, or is it like a feel type of a thing? It's not, you can't put a number on it, but you can just sense one way or the other. Does this seem like an open and transparent relationship where you're willing to tell me everything that's going on? Because people don't like talking about their health, and they don't like talking about their money, even with their doctor, even with their financial advisor. So is it just something you know and can feel, or is there some objective numbers you can look at? Laura, let's start with you on that. Is it objectively, or is this really a sentiment?
It's more of a sentiment, but I think the actions will tell you when you're earning trust. You know, if you start at the protector, these are the people that they know deep inside they don't have the investment expertise that they need. They know they need a professional money manager, but they're scared to death of losing everything. They don't trust the market. They often don't trust the advisors that they've hired. So these are the people, if it's a $250,000 minimum to engage with you, you'll get that and probably not a penny more. But you can build their trust over time. You just need to prove to them that this isn't the wild, wild west. We have rules. You follow the rules. You also need to show them that you're going to do things for them that aren't going to generate fees for you. Take a look and, you know, maybe give them some guidance on their 401k. Take a call from their sister-in-law and give them a little bit of advice, and don't charge them for everything. That can really go a long way to building trust. And just wait for them. If they have a windfall, tell them, hold off. Don't invest it all right now with me. Let's do this over time. Again, they need to know that you're in it for them, and that so many of them called advisors used car salesmen. You want to make sure you're not the used car salesman that they think this industry has. And, you know, I can go on, but I'll kind of stop there. But each one of these personas, you can definitely build trust with. And as you build trust, you will get more market share. And so, or wallet share. And as you get that wallet share, I think that's indicative of, you know, the trust that you're building.
Right. And Peter, don't roll up to the meeting in the Lambo. And you know, gun the engine just to let them know you're there.
I'm just as worried about my coworkers seeing what I drive as I am clients, but no, I drive a very reasonable car. You know what though? That's what's interesting about these is, you know, wallet share seems like the obvious objective metric. I would suggest that like client referrals is probably another quantifiable thing that shows a lot of trust. If someone's out there, even if they're not closing, you know, making introductions, inviting you in. There's one client of mine where he was a very public, prominent figure, and our relationships are confidential. If the client chooses to tell people, that's great. He crosses the room at this rehearsal dinner and puts his arm around me and goes, "This guy is my best advisor." Now, this is one of the people who's a competitor, so it's great that he did that. And you know, that's the sort of thing that, yeah, you can quantify moments like that, but I also do think you can feel it too. I mean, I know what clients really trust us and what clients really don't. And there are little signs, like there's one client I can think of where when he came to us, he and his wife had, I think, 7 advisors over a 3-year period because they kept experiencing advisor churn at the, you know, their guy would go to a different broker dealer and then they would change somebody internally. And so he always kept this spreadsheet they bring to every meeting. And I was with this couple all the time. And then one time he didn't bring the spreadsheet. And I made mental note, but the next time he didn't bring it either. And I said, "Well, Frank, you didn't bring your spreadsheet. You must be feeling pretty good about this." He goes, "I am. Yeah, I was just talking to Wendy about it. We're feeling pretty good about it." So there are a lot of anecdotal points. And I think to Laura's point about building trust with these different personas, you can build trust with anybody. It just takes time. I'll just share one more quick anecdote where I mentioned back when I was 25, it was hard to get people to give me assets. And somebody referred to me a veterinarian, and the wife was a veterinarian. The husband was in medical school. He wasn't sure what he was going to specialize in yet. He ultimately went through a residency and a fellowship in spinal surgery. And their income jumped from, I think, $80,000 as a household to $870,000 in like the snap of a thumb. But all those years ago, I did a few things for free. I helped. I said, you know, you don't really need to hire an advisor. Why don't you just do these couple things? If you ever need help, just reach out to me. It's not a big deal. Happy to, you know, give you some quick advice. Well, when the final moment hit and everybody wants to attack, you know, these surgeons who, this is just a starting salary. You should see what he's making now. It's crazy. But you just do those little things and you don't ask for anything in return. And I think people underestimate, you know, playing the long game. And I think successful advisors do play the long game. It's really easy, particularly when you're younger and you're hungry and you want to make more money, that you make an asset grab, or you try to. But in the long run, you know, that long run game is going to build you better trust, going to get you a better client. Like I said, I used to play the competitor when I was younger, and I would do asset grabs, and that took a lot more work because it's what I had to do. Fortunately, I was also playing the long game with a lot of people as well. So I think that's important for building trust.
And I know, Lizetta, that is the name of the game for you. You've been playing the long game since you started, and this transition in the last few years, really to 2050, that is really what it's all about, building a legacy business that can scale and grow over time. But I think Peter's point, Lizette, is so important about the referral aspect of it. Yeah, assets under management is nice. Getting them to part with another 500 grand, million, whatever that is, or all of their investable assets, fantastic. But I know for you, the referral part of it's a big deal. How often as a firm are you measuring where the business is coming from? Is it referral? Is it marketing through your public appearances? Is it a speech you gave? How often and how frequently are you looking at that data? And what does it teach you, Lizetta?
So when Rianka and I merged our firms, we both had a practice. Mine started in 2008 and hers not there long after. So we were grateful to have like-minded clients. So when we came together and made our announcement, we had a happy hour. And I tell you, that is a sign of trust when clients are willing to let somebody else know that they're clients and want to meet each other. So that was so gratifying. And that definitely started our referral as well, too, with us being a partner. So that was very seamless for us and for our clients and for the referrals that we got. They knew us individually, they celebrated us together. And now that we're extending the team, it's that same culture, that same vibe as well, too. And what Laura says in terms of action, how it shows up. Another thing that's so important to us as well, too, is what you said. Like when I was, announced as a top 10 again, it was just like, our clients were just like, and Bianca's on the list as well, too. Both of us being on the list, it was our clients who really promoted us the most, right? And so a lot of people like to be behind the scenes, but they like brag rights. That's my planner, that's my planner. And, I had the fortunate opportunity to be on CNBC some time ago. And so this whole concept of family in its good sense, because not all family is good, is that they really do trust you and they call, okay, I don't do anything until I contact, my financial planner, and you should have my financial planner. So we're like, we got the biggest advocates. That's our marketing, that's our work. And that makes us really proud.
Yeah, I know nobody gets more excited. I get so excited to refer folks to my planner as well, because you're like, oh, I got people. Oh, she's great at we just worked with them on the college experience, on the paying for college. It's like, fellow parents ask me, what did you do? And I got somebody. And I get so excited to make that referral. And that's probably the best thing out there when your clients themselves are just so fired up to refer you, or they see you both are out there so often in the public, spreading the good word. I want to talk a little bit about that because as I said, folks, these are, two of the top 10 of the Investopedia 100. You'll find them on that list every year. Why? Because they're all about promoting the best in the industry, promoting the education, promoting the learning, promoting the understanding, not just to their clients and the general public, but to other advisors. And you will always find them, finding ways to congratulate or help other advisors do better with their practices and also do the work in their communities. So let's start with you, Lizetta, because you're so good at this and you do it, with such grace. You're out there, putting out a lot of media yourself. You're on CNBC. I've seen you. We've had you here a few times, but you're constantly being cited in the FA mags and across the industry there. How important is that in terms of shaping your practice, getting business, and also establishing that trust?
So as a part of our firm for 2050 Wealth Partners, we have, a several list of values, and one of them is advance the profession. As well, too. So that is a core part, a core value proposition for our firm. So Rianka as well is out in the public. And so we cross-purpose the work that we do. I'm a writer for wealthmanagement.com. So I do culture and talent, right? We're growing a business. We're trying to help other advisors know how to nurture their greatest asset. That's their human capital. I also write for Gen X and Money. We're the forgotten generation for Next Avenue. And so these are the articles of things that we share with our clients in our newsletter, the conversations that we're having about should you extend family a loan or educating. We do presentations and we use Investopedia terms as well, too, as a hyperlink to educate our clients as well, too. So we see it as a part of honing and sharing our craft to make it accessible, digestible, so people are really empowered to enjoy their money and live the life, the legacy they deserve. And it's really rooted in education, access, and joy in the journey.
Yeah, folks, you got to check out Lizetta's site, the 2050 site too. You guys have so many good resources on that. Follow Lizetta across the social media too. And you'll just keep learning, because every time I look at what you guys are up to, so much good education in there, so much good information there. I love what you're doing there. So Peter, you're also very good at this. You have the podcast, you've written the book, but you're also out there very publicly as well. How important is that? And I know all advisors, when they're starting out, or even those that are established, they look at you guys and they go, how do I do that and run my business? I got to run the business of this firm. How can I be out there talking all the time? Or how can I have a podcast? You didn't start by doing all these things. This is something that you organically built, but how did you do it? And how does it contribute now to the deal flow, to the business that you're generating?
Yeah, I think the most important thing is it's one thing at a time. And when you watch all these other advisors that you admire, and this happens to me too, I'll watch other advisors who I'm even close friends with, or those I only know lightly, or those I just admire from a distance. And I think, well, gosh, I should be doing that too. That looks like it's a really important thing to do. And it would be good for me to do, help me grow my platform and reach more people and bring on more business. Whereas for me, I just started with an email. And it's an email that I still point back to. It was weekly back then it was monthly. Now it's every other week. It's really every other week. I used to change the cadence, and that email is at the crux of everything. And I don't think it's that difficult to set something up, but whatever you do is consistent. And there's a lot of research that shows how much trust you gain simply from being consistent. And if you think of us all as little rats in Skinner boxes, they want to know that when they push the button, that food is going to come out. They don't want to be confused. We are animals too. We don't want to be confused. And so we build trust quickly through consistency. And you're right. We do, Lizetta, myself, the others in the Investopedia 100 do lots of different things, but it is building blocks. And you ask, how does it impact business today? Well, I can attribute at least $100,000 in annualized new revenue each and every year for the past decade to efforts from the publishing and the social media. The podcast, I just hit my 1 year mark, and I can point to 2 clients definitively from that. It's hard to tell beyond that. But one of the things that I tell people who are trying to get started is I don't do a single thing that I can't recycle with clients, prospects, and employees. Employees are really important, because here I am, I'm just being a megaphone. I want to speak the Plain Court message. One of the most challenging things I have is that our average wealth manager that's leading a relationship knows way more about taxes than I do. So if I go out here and write something about taxes, that could be complicated. I got to get their take on it. But when I'm writing about investments, I'm sort of projecting to them what the Plain Court view is. And so I try to make sure that, yes, there's not a lot of time. And so you have to use it effectively. And when I really first started, Caleb, I worked nights and weekends. I just don't think there's an easy button here. You just have to work more. And at a certain point, maybe you're good enough at it where it justifies freeing up your time to delegate other responsibilities so you can focus a little bit more so on doing it.
That's a great point. And what I think is also so important, and what makes you guys so good at what you do, is you're not going outside of yourself. You are doing what you're good at. It's organic to who you are. When I see you out there or listen to your podcast or read your work, this is not you trying to be somebody else. This is you being you at your best, which is what attracts people to you and your business. All right, let's take it back to FlexShares and the study. We'll go out on this. Fascinating stuff in here, Laura, that you guys put out. For folks that want to learn more, I know that we're going to put this out along with the deck for folks that watch this and for folks who want to catch up on this. But where can they find more material on this? And what else is there that we should know, or that advisors should really know about what you were able to dig up through your study and your survey?
Yeah, absolutely. So the website is go.flexshares.com/wallet share. Wallet share is all one word. We supplement this also with a podcast that we have called The Flexible Advisor, where we have guests on that talk about the different research views and a lot of other topics within the industry. But, I would say, the most important, a few key points on this wallet share research. One, it's just more efficient to grow your assets under management with existing clients. Not to say you don't need to do new business development, of course you do, but are you getting as much as you can from your existing clients? And then to just underscore what Peter and Lizetta said, you can do that by building true, authentic relationships, showing your clients that you care, that you have their best interests in mind, doing some things just because it's the right thing to do, not because it's going to generate a fee, and taking the time to build that relationship, to know the different personas within your client base will really grow the assets and grow referrals and wallet share.
Yeah, you just said it. Authenticity, right? Truth, being consistent, being true to yourself. That's right there. Peter Lazaroff, Lizetta Braxton, two of the best in the industry. So delighted to have you guys on board for this conversation. Again, two of our faves, two of the best in the industry at doing what you do, being authentic to yourself, building that trust with your clients and with the financial advice community. And Laura Gregg, the Director of Practice Management and Advisor Research at FlexShares. Fascinating survey, fascinating study. So much good stuff coming out of the FlexShares family. We really appreciate your partnership, celebrating the Investopedia 100. And thanks to you folks for tuning in. Good to be back. We'll be back soon. We're going to be doing more of these throughout the year. And I look forward to sharing more of the great work that these advisors are doing as well. Thanks so much for joining us.
Thank you.